RFD-TV.com. While changes to the federal tax code have the potential to benefit agriculture collectively. As producers do year-end tax planning, the Nebraska Farm Bureau has developed a guide to help navigate through the revisions. Joining us now is Nebraska Farm Bureau Director of National Affairs, Jordan Dukes. Jordan, thank you very much for taking the time to chat with us today. Now, again, you guys put out this guide highlighting 5 specific areas for producers to examine. How did you go about putting this together?
You know, first and foremost, we consulted with a number of folks who understand tax law, tax provisions, but certainly before making any changes or examining your taxes for the end of the year, make sure you talk to your tax professional in some way. But we put together kind of what our highlights were when the law was passed and kind of narrowed it down to 5 particular things for producers to pay attention to as we get to the end of the year. And
what are those 5 items?
The first one is to pay attention to the new tax brackets, and they changed a lot of things as it relates to individual tax rates. If you're organized as a C Corp or a pass-through business, an S Corporation, pay attention as to how all the new rates and new brackets affect you. Number 2 is to examine the new capital investment rules. There are some big changes and some positive changes to Section 179, doubling of that exemption, but there are some changes to some other provisions. Section 1031, like-kind exchanges, some changes there that will affect how a farmer files their taxes, so they need to pay attention there. Number 3, the estate tax is essentially doubled. It's not permanent, but that estate tax exemption has been doubled, so that's a good thing for agriculture. The Obamacare mandate, the mandate to have health insurance, was eliminated under the tax bill. They struggled to try to get some sort of replacement in place, but they did eliminate the individual mandate, so pay attention as you file your taxes there. If you did not have health insurance, you don't have to pay a penalty. But then the 5th thing is probably one of the more important things, was provisions that were maintained, that were not changed. Farmers can still fully deduct their property taxes, which is a big deal, especially here in Nebraska. They can continue to deduct business interest, and cash accounting is what was actually expanded for more folks to be able to utilize it. So we were told a lot of things could change in the tax code. There's a lot of positive things in it, but certainly we hope folks will pay attention to all the changes and make some conversations, have those conversations with their tax professionals as we get to the end of the year.
And Jordan, we've run through this list pretty quick. Is there a place where folks could find the rundown of the information you provided?
Absolutely. They could go to our website, www.nefb.org. It's right on the front page there. It just kind of has some explanations in there as to what the tax brackets look like, how these new reinvestment rules look like for folks who will make capital purchases, and kind of have some explanations as to all these different pieces. Again, there's a lot of specific information as to how this fits into your operation and what you need to do before the end of the year. We hope we're just trying to be helpful for folks as they start making that tax planning happen here now that harvest is wrapping up.
All right, Jordan, thank you very much for the insight. Again, Nebraska Farm Bureau Director of National Affairs, Jordan Dukes, joining us on the phone from Lincoln.